How to use the bullish engulfing candlestick pattern most effectively for your trading. It is one of the most known and most used candlestick patterns in trading, and it can be really powerful for finding high potential setups if used correctly. For this reason, we will do a quick tutorial exactly on this pattern to enable you to use it correctly for your high potential trading setups. So let's get started really quick. What we see here already is a bullish engulfing candlestick pattern. And it's characterized by this red candle with a small body followed by a green candle with a large body which totally engulfs the red candle's body from before. So this is a bullish trading signal, often occurring after a downwards movement and signaling the beginning of an upwards movement. So it's a bullish reversal candlestick pattern. In order to help you identify them in the beginning, I think later on you will spot them in the chart really easily. You can go on TradingView to indicators and then click on technicals and patterns. And if you scroll down there, you will find the engulfing bullish one. And this displays you on the chart all bullish engulfing candlestick patterns. Because I'm displaying it here at the moment is because I want to show you that in most cases, the bullish engulfing candlestick patterns are really occurring at the bottom after a downwards movement, signaling the beginning of an upwards movement. Of course, it's sometimes just a short upwards movement. It's hard to tell, of course, but here for this case, for example, it's followed by another bullish engulfing candlestick pattern and a definitely more longer upwards movement afterwards. Here as well, beautiful pattern and an upwards movement afterwards, but in this area here, this is more of a sideways range. I will zoom in a bit. So you see that here we have really long-bodied candles. So there's indecision in the market, so I would not recommend to use this candlestick pattern as a bullish signal. After that as well, we have a long green body, but as well a long short body, but still not really decisive. This changes here when the body of the green candle is almost twice as long as the red one, but even more clear, we see here the candlestick patterns afterwards. After this, we have a clear movement upwards as well. So please stay away from those indecisive phases and indecisive patterns. And later on, we have a beautiful pattern here as well, followed by a second one, a small movement up, but of course, after a pullback continuing here. So you see there are always beautiful bullish engulfing candlestick patterns that work in the most cases. But what we want is not movements that are this short of distance. We want to catch the high potential ones, which have a high potential to give us a big movement into the upwards direction. So let's check if we have one in our situation here that we want to decide now if we place a trade here or not. For most traders, it would probably be enough having this bullish engulfing candlestick pattern, but we use our analysis first to confirm this by at least 2 more arguments before entering the markets, because this is what characterizes professional trading and long-term successful ones. So for this reason, let's zoom out a bit. I will erase the bullish engulfing candlestick patterns. We don't need them anymore. And I will jump a little higher to a little higher time frame to make it more easy to take a look at. And you see we are at the moment in an area where the market has reacted to quite a lot. Here as a resistance, here and here again. Afterwards acted as support here. So it's a really key level, a really strong one, which we can expect the market to react to again. So let's jump back to our 15-minute time frame. And here we see that we reached this area already. And additionally, we have this level here where the market has reacted to most recently and built a double bottom here. First bottom, second bottom. And with this bullish engulfing candlestick pattern here, a third one, so a triple bottom here where the market has reacted to before. So this is a key level and a high potential that the market will bounce off of this level into the long direction again. So this is confirmation number 2. But let's look for another one. I will zoom out a little bit because we will apply the Fibonacci retracement, but not from the last low because we didn't have another high afterwards. We will place it with the last high and the last low and then stretch it out onto the sideways range that we had afterwards that occurred right here. And we see within this Fibonacci retracement, we are between the 50% and the 61.8% line. So this is definitely confirming our analysis from before that this is a high potential turning point. So we have 3 arguments meeting plus this beautiful bullish engulfing candlestick pattern is at the same time you see this red candle has a really long wick to the bottom, a hammer candle, so also a bullish candlestick pattern. So we have at least 3, in this case even 4 arguments meeting here. Therefore we will place our long position after the green candle, put the stop loss of course below this support and resistance level, so we make sure that we don't get knocked out by another spike down like this, for example. And our target, of course, the first one we will place a little below the last high. And since we are in an attacked upwards movement, of course, we would use a second target for the trend continuation long. And here we see our first target got hit right here, and then the market continued its upwards movement after it found resistance in this last high and then continued long, where we would, of course, place our second target. So you see we had a risk reward ratio for the first target, of course, only of 1.4, so this is not that much, but if you combine it with a really good hit rate, then you still have a really powerful strategy with great outcome. Plus with a second target, of course, we would realize a even better risk reward ratio. And you also see that it's more important to place your stop loss out of this critical area, because in this case the market came back to this resistance level and found support here again before continuing long. So this way we kept our hit rate high and our profit as a profit instead of a loss, because we placed our stop loss far enough away. Please always remember this, guys, because I see traders so often place them too close to the entry point, and this turns a really high potential trade into a losing one. And that's it for today's video. I promised you it's a quick tutorial. If you have any questions regarding this candlestick pattern, leave them in the comments below and I'll be happy to answer them to help you on this topic to improve your trading results. And if you're eager to learn more or even trade with me, then click below this video the link to my website where you will find all information about it. So I'll be happy to meet you there or at the latest next week with the next video here on YouTube. So see you then. Bye bye.